February 4th, 2026. AMD crashed 17%. The AI boom is in full swing, and an AI chip company just collapsed. That same day, Oracle borrowed $50 billion. Why? The answer to this paradox will define who wins in 2026. The surface numbers looked good. Revenue beat estimates by $600 million. Big customers like Oracle and Meta signed on. So why did Wall Street sell? Of the $600 million beat, $390 million came from China sales. That's the problem. China revenue is a ticking time bomb. US export controls are tightening. Could evaporate overnight. Wall Street never rewards one-time surprises like this. Strip out China sales? AMD's growth rate gets cut in half. The institutions already knew. Within 30 minutes of the earnings call, $17 billion vanished. The real problem is margins. Nvidia margins, 70%. AMD margins, 54%. What does that 16 percentage point gap mean? Nvidia sets the price. AMD has to discount to sell. In the AI accelerator market, AMD is still number 2. From H100 monopoly to B200 monopoly, customers are locked into the Nvidia ecosystem. AMD is the "it's cheaper, let's try it" option. A stock trading at 126 times earnings with no pricing power? Disaster. Wall Street is remembering the year 2000. Back then, Cisco traded at 200 times earnings. The story was, internet traffic doubles every 100 days. Then, the stock crashed 80%. Revenue kept growing, but the stock never recovered for 20 years. AMD at 126 times earnings. The story is, AI demand doubles every 3 months. History repeats. A great company at too high a price is a bad investment. AMD is a great company, but at this price, here's the thing. While AMD was collapsing, Oracle made the opposite bet. February 1st, 2026. Oracle announced, "We're borrowing $45 to $50 billion. How big is that? Oracle's $50 billion. That's 6% of the entire US defense budget, borrowed in one shot. This money comes from issuing new stock, diluting existing shareholders, and issuing corporate bonds, adding massive debt. Larry Ellison is 81 years old. He's betting the entire company. On what? The answer is OpenAI. Microsoft is building OpenAI's data centers directly, but they can't keep up with the speed. OpenAI called Oracle. You build it for us. The Oracle OpenAI contract is worth $300 billion. That's 6 times Oracle's current annual revenue. Sam Altman's dream. Stargate. Hundreds of thousands of GPUs. Power consumption of a small city. Phased expansion through 2030. Oracle just became the construction company for this monster. But the price is brutal. Oracle's free cash flow projected negative through 2030. Oracle considering 30,000 layoffs. Cerner division sale rumors. Debt ratio concerns over 200%. Larry Ellison knows if he loses this infrastructure war, Oracle stays a dusty old database company forever. Larry Ellison is 81 years old. This is his last bet, but there's one problem. Oracle can buy GPUs with $50 billion. They can build the buildings, but can they buy electricity? The one thing money can't buy: power. One Nvidia B200 chip consumes 1,200 watts. That's 70% more than the H100. Running tens of thousands of them, a single large AI data center consumes the power of 50,000 homes. The problem is the grid. PJM, the Eastern US power grid. Average wait time for connection, 5 years. You can finish building today, but you'll wait until 2031 to get electricity. Oracle's $50 billion? Without power, it's just an expensive warehouse. That's why this company took off. Bloom Energy. They don't go through the grid. They generate electricity right in the data center parking lot. Bloom Energy stock, up 74% in January 2026. Even AEP, the US utility company, gave up. Can't build transmission lines fast enough, so they bought $2.65 billion worth of Bloom's fuel cells. And the return of the king nuclear. Solar goes dark at night. Wind stops without breeze. That's why Meta signed a 20-year contract with Constellation. The 2026 energy supercycle winners. First, Bloom Energy, ticker BE. Speed is the advantage. Install in months. No grid waiting. Risk is hydrogen price volatility. Second, Constellation Energy, ticker CEG, largest U.S. nuclear operator. 247 baseload power. Risk is regulation. Third, Next Era Energy, ticker NEE, 30 gigawatts of renewable backlog. Partner to big tech. Risk is interest rate sensitivity. I'm not a financial advisor. This is not investment advice. But here's what Wall Street traders are doing right now. Short semis, long utilities. Remember February 4th, 2026. From chips to power, from digital to physical, the AI revolution isn't over. The battlefield just changed. Is your portfolio ready? Tell me in the comments. Buying AMD? Rotating to energy stocks? Holding cash? If this video helped, subscribe.